beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good afternoon. Welcome to Closing Bell. We are here to take you through the last hour, and it's turned out to be a pretty decent day of trade so far. So the market hasn't had a galloping move on the upside, but every day that the gains are at least retained, we'll take it. Though there is a bit of a downward drift. Now the bulls will hope that they can retain the bulk of this. Remember that the all-important mutual fund inflow data for the month of August is due any minute now. Remember, July was a record month with domestic investors like you and me piling in over 42,000 crores. So let's see. Those numbers are expected to be fairly healthy this time around as well. We'll take you through the latest on that. Nigel's here. Rima's joining in just the next couple of minutes. Nigel, not too bad a day. I mean, banks, IT, a little bit of contribution from most parts.
Well, that's right. The start was very, very good, Surbhi, but the point is where we're going to end, and you'll want the Nifty to end around at least these levels or at least build onto that. The good news is the IT index seems to be getting its way back. It's been a big, big underperformer. And two levels that I'm looking at. On the Nifty, the 25,000, the bears are coming in to defend that mark, 25,000, 25,050. And on the Nifty Bank, actually, if we pull up the 20 DMA with the Nifty Bank, you'll get the perfect picture because earlier today, the Nifty Bank threatened to get to around the 20 DMA, but that level has got rejected. So I think we're at around 220 points away from current levels. The Nifty Bank needs to get past that 54,750 odd mark. That's going to be the important mark. The Nifty is holding about there. That's the Nifty Bank trying to get closer to that mark. But let's get straight to what's on the show.
Absolutely. Lots lined up, and welcoming Rima as well. Take us through the next 1 hour or so. So on the show today, we have to see if the opening gains will sustain or not. So we're, of course, looking at the market very, very closely. We'll get you lots of technical advice on this as always. IT stocks are in sharp focus. There are again big gainers today. And of course, there was good news coming in overnight from Oracle, which has helped that stock. So we'll talk about this as we go along. Shares of Wellspun Living, Gokuldas Exports, and several other textile exporters have been surging on hopes of a de-escalation between India and the US and the possibility of a trade deal coming through soon enough. Then you have the shrimp exporters, shrimp feed exporters, that is. Look at the gains. Apex Frozen now 17 to 18% higher on prospects of more exports to the EU. So we'll talk about this as well as we go ahead. Plenty lined up over the next 60 minutes.
And let's kick started with how you should position yourself in the last hour of trade. Mitesh Thakkar from Bonanza Portfolio is now joining in with his closing strategies. Mitesh, first the index and then the calls for the last hour.
Yeah. Good afternoon. So I think on the index, I talked about the fact that 25,000 could be a very strong level to get past, an important level. There's a lot of open interest on the call side, which means that the call writers will come and try and protect that. But the structure is turned positive. So I think maybe after a dip, the index might attempt 25,000 again. And if it manages to get past 25,150 and then possibly 25,250 are the two near-term or short-term targets on the upside. So trade with long bias. On the stock side, I have a buy on Axis Bank. It's done a very good base building around these levels of 1,040, 50, trying to reverse from there. So would recommend a long with a stop below 1,059 and a first target of around 1,100, 1,105 can be looked at on the upside. And the other one which I like is 361. That's at the day's high, good price and volume action here. So buy with a stop at about 1,054 and a target of around 1,120 can be looked at.
Okay, thank you very much for that. By the way, quite a few mid-caps are moving around. Tollens Tires, not a stock that we often talk about, but large volumes on the NSE. I think it's close to about 30 lakh shares traded hands now. The stock has gained close to about 15% at the day's high. Wockhardt, Morpin Laboratories, SMS Pharmaceutical, these are on the winning side today. Wockhardt is gain of about 5%. Mamta Machinery Again, large volumes compared to what it typically does. Strong price action, 18% up on Mamta Engineering. And then you've got even rate gain. I think there's some news on rate gain, but rate gain is also seeing quite a powerful up move today. We should pull up this stock. This month rate gain is up close to about 25%, though it's still down about 11% from the start of the year. But the big story and the big moves are in many of the seafood exporters, the shrimp exporters, and they continue to surge in trade, holding on to all their double-digit gains. This is after the European Union approved 102 companies for exports. Ria now joins in with the numbers, the details, and more about this story. Ria.
Well, yes, the European Union has approved 102 new fishery establishments for exports to the European Union. Now, this move is expected to add around 16% additional Indian export establishments in terms of trade volumes, and the Commerce Ministry also anticipates an immediate rise of over 20% in trade volumes. Now, India's marine exports to the European Union were valued at about $1.1 billion in FY24, and apart from this, the Commerce Ministry has also said that India had been engaging with their EU counterparts over the past 3 months to address sanitary and phytosanitary issues, and following some technical level meetings and negotiations, all of these establishments that were previously delisted due to contamination concerns have now been reinstated. So this is a big positive for the industry as a whole. Now, the Commerce Ministry has also highlighted that this move is a positive signal for the 13th round of ongoing FTA negotiations between India and the EU, and the listing of these units by the European Union was a long pending demand of India. Now, in terms of the geographical exposure, marine products have recently been impacted by the 50% tariff rate imposed by the US on India, and the US is the top marine export destination for India, followed by the European Union. Now, and also in terms of exposure to the European Union for listed players, for Avanti Feeds, 17.4% of their shrimp feed revenues for FY25 comes from Europe, and they're already working on expanding their presence in non-US markets, which includes the European Union. For Apex Frozen Foods, around 39% of the total revenue in FY25 was contributed from the European Union, up from 26% in the previous financial year. And they've also seen robust demand from this area in the last year, and they continue to work on strengthening their presence in the market. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro, and all of these stocks are performing well in today's trading session on the back of this.
Okay, all right, Ria, indeed they are. Thank you very much. Very smart gains coming in for several of these names. Of course, still beaten down from their all-time high levels. These stocks are down anywhere between 10% to as much as 35% or more. This was after the disappointment with the US tariffs. The question is, I mean, is there a more sort of a sustainable uptrend over here, or is this just a flash in the pan move? Well, let's welcome in Gurmeet Chadha, Managing Partner and CIO at Complete Circle Consultants. Gurmeet, thanks so much for joining in. So much to talk to you about. There's, all these export stocks are so excited today because we've got good news from US and EU. So these, shrimp feed companies first, any interest here? Have you had a look at any of them?
So, Avanti Feeds is something which has been in our universe for a long time, and should be between, let's say, if I were to compare gems and jewelry and textile and shrimp feeds and shrimp processing, in terms of fungibility, it's relatively higher for them. You can, if FTAs are done with EU is currently about 17% for them. US obviously is the largest. Then you have Japan, China. Where you can, over a period of time, decrease the dependence on US. And then obviously today's news of a potential trade deal, obviously impacting the price action. It was quite negative a few days back when these tariffs had come. So some part of the portfolio, a smaller part, you can have a bit of a contra play, which can have. So we have, for example, Gokuldas Exports in our portfolio, small weightage, about 2.5%. They have also done a few acquisitions in Africa and Middle East, through which they can go to EU and other markets. And it's a very large dependency on US with brands like Superdry, H&M, etc., which Gokuldas does. We are looking at Avanti as well as the other company in this space. And we are also looking tactically at some of the IT companies, because especially companies with high dividend yield and 5-6 times free cash flows. I think especially when, and maybe once we have more clarity, especially once the implementation comes of the AI, I think a lot of our companies, especially some of the mid-tier IT companies, could be back in focus.
Do you want to tell us, in the IT companies, which ones do you like? The ones you're looking at tactically?
So, for example, KPIT, we believe if auto in general recovers globally, that could be, and it's again a proprietary IP-driven play. So that's something we've been holding for very long. We are looking at Persistent and Coforge as well. Amongst large cap IT, we have some exposure to HCL Tech as the software business is extremely profitable. The market doesn't give it too much valuation right now. But that's like a 25-30% margin business, and it's a mix of services, ERD and software. And I think over a period of time, valuations are pretty reasonable. So these are some of the names we have in IT. But as I said, I'm not like neutral or overweight. We are 10-15% of our portfolio. You have to be in this kind where if things reverse, because the broader call is that in couple of weeks or couple of months, the tariffs are not going to stay at 50% now. And once that happens and the news comes, you will get very little time to react.
And then there's that expected Fed rate cut also, which is positive for valuations. And one big positive which came out from the Oracle numbers is the cloud revenues, right? What they're projecting. $10 billion of cloud revenues last year. This year, $18 billion. So you're talking about a 70-80% jump this year. And then they're saying 4 to 5 years later, this is projected to rise to $144 billion. So that's a staggering growth. Now, for cloud, you need IT services companies because you need it for cloud migration, for implementation of cloud. So if Oracle's cloud revenues are surging, and as the guidance is, it's also an indirect positive read-through for the entire IT sector because AI requires cloud, and cloud requires Indian IT services companies for migration and implementation. So that's lifting the entire tech sector today. But let's talk about the textile sector. That's also in focus. Vinny joins in with the news first and the analysis. Vinny.
Hi, Rima. So mainly the news is, given that there are so many twists and turns that come in from Trump in terms of tariffs, we see those twists and turns coming in for the textile sector as well. So now let's just look at what's happened in the last 1 month specifically for the textile sector in terms of news flow. On 18th of August, the government had removed import duty on cotton from August 19, and this was mainly addressing the industry's demand, given that there was a 25% tariff that was implemented by the US on India. Now, on 27th of August, what happened is the US administration further imposed an additional tariff of 25%, right? The penalty. So that overall came to a 50% tariff. Now, that becomes tough for the textile industry. And that time we saw that those textile stocks had seen a fall coming in. Now, talking about 3rd of September, the GST boost that came in for the consumption sector from the Indian government, changing the slab rates, most of those, textile components or even raw materials moved to the 5% slab. So that was a benefit that came in for the textile sector, and that was a positive news that came in here. Now, this is going to be applicable from 22nd of September. Now, 10th of September, that is just today, we had those morning announcements that came in. India-US trade talks have again started, positive terms and news flow that is expected there as well. So that is what everyone is watching out for. And on the back of that sentiment, we saw a bit of a run-up coming in for these textile stocks today. Now, going forward, what will be the triggers? One, domestic demand. Everyone's focusing on that as well. That will get a boost given the GST rate rationalization and the government support that is coming in to improve consumption. India-UK FTA, that is positive for textile players. So that will also help them expand their market share in the UK region. And India-EU FTA, that's also seeing positive talks coming in, hoping for the deal to be signed soon in 2025, at least by the end of calendar year, is what some of the analysts are highlighting. Overall, industry players have always highlighted, that when this additional 25% tariff was implemented, that would be a big concern, right? So whether it was Gokuldas Exports, Pearl Global, even APEC, India Rating, analysts, all of them said that handling that additional 25% would be an issue. So now if trade talks between India and US start going the way we expect it to, and on a positive note, then that becomes a positive for the textile industry. And obviously, given that these companies have a good exposure to US, whether you look at Gokuldas, Welspun, Indocount, Pearl Global, Arvind, KPR Mill, that's why this positive sentiment news flow that's coming in between India and US today is leading to that uplift for the stocks.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go back to Gurmeet then. Gurmeet, you just mentioned, I think Gokuldas is something that you'll continue to hold on to. So we'll keep an eye out on that. The other stock that's been buzzing in the last few days is Stovecraft. If I'm not mistaken, I think earlier had some holding out there. Is that intact? I mean, what's the view on Stovecraft? Because that's done very well, actually.
So, Nigel, obviously, it's part of the kitchen appliance segment, which we are constructive on. Plus, they got approved with the Walmart as well, which eventually will come up over a period of time. And I think a couple of quarters, the stock had disappointed in terms of volume growth coming through. So that's something that the exposure we have obviously trimmed a little bit, but we still continue to hold Shopcraft. And in general, I think tactically speaking, you will see a lot of, with festive season around the corner, you could see a bit of a jump in mostly all appliance makers. We've also have not exactly Polycab is comparable, it's more FMEG there, which is 20% of the book. And we are looking at some of the other names like Trent. We are adding, something like DOMS, which is into children's stationery, and now they are expanding into pens from pencils. They have acquired a company in Eastern India, and they are also getting into child and baby hygiene in form of diapers, etc. New plant coming in. So that's another one we are having. So we are playing a consumption basket through a broader scheme of things. Anything saved eventually will probably move more towards discretionary, and a part of that would probably be the appliances, the travel, the hospitality, etc. The overall household budget.
Okay. All right, got that point. Let's take a look at the large cap screen. 60 points on the Nifty now. So yeah, there is a bit of a struggle to retain the gains, and a lot of the auto stocks are seeing a cool off after their big run up. So M&M would be 3% lower. Maruti, Hero, Bajaj, Tata Motors, all of them actually, all five are right at the bottom of the Nifty heap this afternoon. Gurmeet, should one be, because these stocks have run up a lot, I mean between 10%, 20, 25% in the last few weeks, should one be buying the dip on some of these large cap OEMs? Or do you think the bulk of the excitement has already played out?
No, Surbi, I think you will see a very strong season ahead. Once let the Navratra begins and you get, I think once the update comes in October of September numbers, I think you'll be positively surprised. I met some senior officials from Maruti yesterday evening, and they said that after 2-3 years of -6% growth in small car, they are now targeting about a 10% growth, and they say even that can positively surprise. Now, that's the reason even Maruti has moved up. So it might look that it's moved up to 15, but mind you, this was 10,000 rupees in 2017-18. They hasn't done anything in last 7-8 years, right? So it's just that the recent move can cloud it. See, barring M&M and TVS, which have been star performers in two-wheelers and OEMs, passenger OEMs. Others have not done very well. Look at Tata Motors. Obviously, that there is a different style to Tata Motors. So I think the feedback we are getting from dealers, and I have a couple of clients who are large dealers, is that this is probably one of the strongest auto season ahead. So I would actually be very constructive there, because there is genuine 10-15% savings happening across the board, starting with, let's say, 10-15,000 rupees on motorcycles, going up to 3-4 lakh rupees on cars up to 50 lakhs. So that's a substantial saving. And there's a big surge in booking in terms of delivery for Navratras. I'm sure the numbers will follow.
Gurmeet, this Vikram Solar, one of the new listings, makes solar modules. Very strong numbers in Q1. Company's top line went up by nearly 80%. And generally, even the others in this space, like Vari, etc., had a very strong quarter. Do you like any in this sector?
See, we missed out on Vari, to be really honest, and I think right now it's becoming a little commoditized. So my sense is the margins may come under pressure, may not be able to sustain valuations. So we are focused more on the power systems and equipment, which we think is more secular. So something, for example, like in rectifier, which probably caters to 90-95% locomotives and railways. You have something like CG Power, where you get both power systems and now the OSAT play on semiconductors. The stock was up today. And obviously, the typical transformers, rectifiers, insulators place. I think that's where the return ratios are better, cash flow are better, working capital requirement won't be under stress, and less cushion, some cushion from, the tariff and dumping related plays.
Okay, all right. Good to have you on the show, Gurmeet. Thanks a lot for joining in and giving us your quick take on all of those stocks. By the way, keep an eye out on the Nifty. We've slipped a little bit more. And this would go down as a bit of a disappointing session, actually, because we started with solid gains, but now we're struggling to hold on to those gains. You don't want us to fall too much from these highs. I'll tell you what, we'll slip into a short break. We'll be back. Varun Goel of Mirai Asset Management will be joining in. Stay with us.
Welcome back. Off highs, but still holding on to gains of about 1/3 of a percentage point on the benchmark indices. Mid-caps up 450 points. It's time now to talk about the big movers. Put the spotlight on the top movers at this hour. Hormus is at the big wall.
Yet another session that is turning out to be what could have been instead of what has transpired. But before we get to the broader market movers, the two major themes dominating today, of course, are exporters, be it the shrimp feeds or the textile names. And take a look at the volumes at which these stocks are surging at. Avanti Feeds having the highest volume since December of last year. Apex Frozen since July of last year. Indocount, of course, since June of this year. Moving on strong volumes. And now look at the volumes in comparison to their averages. Avanti Feeds has had more than 1.2 crore shares that have been traded already. There are a 20-day volume of just 3 lakh shares. Apex Frozen has had 80 lakh shares traded, 2 lakh shares as a 20-day average, and Indocount has 45 lakh shares traded. And again, a 2 lakh average for Indocount as well for the last 20 trading sessions. So moving fast on very strong volumes are these exporters. The other stock that has done well today is Pokarna, and this 8.5% surge is the biggest single day gain on the highest volume since April of this year. And the last 3 sessions the stock has moved 15%, and before this 3-day gaining streak the stock fell for 8 days in a row and now is recovering some of those losses over the last 8 sessions. And today we have had 10 lakh shares that have changed hands compared to a 20-day average of just around 75,000 shares. Now the still remains below all of its key moving averages. The first important level on the upside is still some distance away, the 50-day moving average that comes in at 952. And despite this move, the stock is still down 25% this year, but had more than doubled last year with returns of almost 2.5x. Cartrade Tech, of course, at one point was down 17%. It was the biggest intraday fall on record for the stock. Saw some recovery from the intraday lows. That recovery has also been sold into, and we've already had 27 lakh shares that have been traded today compared to a 20-day average of just close to 3 lakh shares. But in the 3 months prior to today's trading session, the stock was up 75%. And from the lows of March of 2023 till the highs of yesterday's trading session, the stock was up 8x. So from levels of around 300, 350, the stock was well over 2600 as of yesterday. And the last one on the list is Mamta Machinery, a recent listing, listed in December of last year. This 18% move is the 3rd biggest single day gain since it listed. And today's volumes, of course, are the highest since July. We had more than 1.5 crore shares that have been traded today compared to a 20-day average of just 3 lakh. And this level of 486 is exactly double of its IPO price, which is 243. The IPO was subscribed almost 200 times. Of course, the issue size was smaller, so we have to adjust for that proportion, but still down around 23% from its post-listing high. 18% higher today is Mamta Machinery.
Okay, all right. Lots and lots of movers and shakers as always. Hormas, thanks very much for that. Plenty of interesting names on that list. Well, let's go on then and welcome our next guest on the show. Varun Goyal of Mirae Asset Investment Managers is with us. Varun, thanks so much for joining in. It's consumer, right? Last couple of weeks. It's been building actually since the RBI rate cuts, the income tax cuts, and now the GST cuts. You tell us, any changes in the portfolio? Have you been loading up on consumer, changing anything, or you don't think that this requires too much of a tactical change?
Afternoon, Subi. Thank you so much for having me on the show. I think, for the year as a whole, our sense is this is the year for domestic cyclical recovery in India, and we've been betting on earnings revival from 3% last year to more like 10-12% this year. So we continue to be constructive on domestic cyclical sectors like banks, NBFCs, auto, consumers, select capital good names, real estate, and that continues to be the theme. Of course, I think the GST cuts that have been announced are very strong, will strongly influence the earnings of the auto, consumer durable companies, cement companies going forward. And as such, we have marginally increased weights in some of these spaces. But we continue to believe that anyways, India is in the midst of a strong cyclical recovery. And hopefully, with the trade-related issues also expected to get settled in the next few months, we should see a good year as far as earnings are concerned.
So on consumer, since you mentioned, Varun, that you already have had exposure among a lot of the other segments, can you just narrow this down a little bit? Because auto stocks have done very, very well. Hotel stocks anyway were, they've been better performers, say, than staples. So again, what part of it do you think, there are gains beyond even maybe the immediate festive season pop?
Yeah, I think auto, two-wheelers, four-wheeler, tractor space continue to do quite well. Our sense is the monsoons have been good. We expect a strong revival in agricultural income, so we continue to be very constructive on the farm equipment and the agricultural space. I think two-wheelers again is after. I think there is a big price increase which happened post the change from BS4 to BS6, and now I think we are seeing a very big price cut, and that should go a long way in reviving two-wheeler demand. So I think definitely it's a big positive for auto space. I think even consumer durables, it's something that will benefit out of this. I think discretionary consumption in terms of services like hotels, hospitality, that's a sector which will continue to benefit, and as such we remain positive. As far as the more stable space is concerned, our sense is food and beverages being more discretionary in nature is something which will benefit more than the more stable categories.
Varun, just hold on for a second. We're getting the monthly inflow data. That's about 5,000 crores coming in small cap funds. So basically, it's slightly sobering compared to the massive pop that we saw in July. The net equity inflow number is 33,417. So that is obviously a drop, a significant enough drop from the 42,600 odd crores that we had in July. And the simple reason behind that, from the first cut, what I can see is that we don't have the kind of NFO party that happened in July. July saw, huge amount of NFOs on all sides, on equity, on fixed income, on hybrids. And NFOs alone had pulled in 30,000 crores in July. But that's not the case this time around. If I take a look at the total, new fund offerings, then the number is a paltry 2,859. So not much NFO action, which is okay. I mean, you can't expect, the same kind of NFO momentum month after month. You have a couple of patchy months and you pick up again. So that's what we have as of now. The interesting facet is that even now, mid-cap and small-cap funds, they are attracting a bulk of the flow. So let's take a look at category by category and what's happening. On the large cap side, we've seen an inflow of about 2,834. But you look at the mid cap side, the mid cap fund category has really pulled in the money, 5,300 odd crores. So that's the first bar. That's what we need to look at. That yes, there is a deceleration, but it's not a dramatic drop or anything. I mean, last month's number was bumped up because of NFOs, and this month we don't have so many big NFOs pulling in a lot of money. That's what's really happened. The small cap and the mid cap category, they continue to get in the lion's shares of the flows. 5,330 crores in mid cap funds, almost 5,000 crores in small cap funds, and large cap funds have pulled in about 2,830 crores. So that's the next important trend to keep in mind. Now let's look at what's happened with the hybrid side, because we know that as investors have been looking to diversify, a lot of the hybrid funds, which could be balanced advantage funds or multi-asset funds, these funds have been pulling in a lot of money, and that trend is intact even this time around. So the hybrid category as a whole has pulled in about 15,300 odd crores. So that's what we have from the hybrids. And if I talk about hybrids last time around, it was an exceptional month for hybrids, because last month in July, hybrids as a category pulled in almost 29,000 crores. Again, thanks to a lot of NFOs that came through. This time it's a little on the lower side, you'd have to say. Then let's look at what's happened on the passive side, index funds, gold ETFs, etc. Gold ETFs have pulled in about 2,200 crores. So despite the fact that gold prices continue to be at all-time high levels and they continue to surge, there's still money coming into those funds. There are other ETFs which would also include the silver ETF category. Remember, silver has been drawing a lot of investment as well. So that's pulled in 7,250 crores almost, the other ETFs category. And index funds have done pretty well as well. So the passive inflow is continuing. Doesn't seem to be any problem there. We'll have to wait by and see what happens on the SIP number, because that's been the strongest story for the Indian equity market. In July, that SIP number had crossed 28,000 crores. So let's see if it's intact. I mean, it's been nicely, solidly trending. 26,000, then we crossed a 27,000 crores milestone. This is on a monthly basis. And last time in July, we had crossed a 28,000 crore milestone. So we'll have to see if that stands through as well. I think let's see if we have Mr. DP Singh joining in for a quick reaction here. I think we have Mr. Singh with us, Deputy Managing Director and Joint CEO at SBI Mutual Fund. Mr. Singh, thanks so much for being with us. So yeah, we don't have a huge number like 43,000 crores. It's a little over 33,000. But how would you describe it? Lesser NFOs, so slightly lower action?
Yeah, lesser NFOs, and there was some withdrawal of money from arbitrage category, as you rightly said. In the hybrid category last month, it was huge money, and this year, this month, it is less. This is basically because of the arbitrage flows. Arbitrage flows much lesser in this month. But overall, two reasons. Yes, one, what you rightly talked about the NFOs not being there, and second, some withdrawals from the arbitrage funds.
Okay, I'm just okay. Withdrawal from the arbitrage fund category as well. Dynamic asset allocation funds have pulled in 2,316 crores, which is pretty similar to what we've had. And hybrids, as Mr. Singh is pointing out, hybrids this time around, or arbitrage funds specifically this time around, have pulled in 6666. That's a lot of sixes. So basically 6,666 crores. That's what's coming into the arbitrage category. So that explains it. But okay, Mr. Singh, just hold on. We also have Akhil Chaturvedi, Chief Business Officer at Motilal AMC, joining in. Akhil, you tell us, we're awaiting the SIP number. But aside of that, how do you describe the new product launch category in the market? It is these NFOs, and they've been happening across the board, right? On the passive side, on the active side. Every time we have big NFOs, we see a bigger number. So what is the NFO pipeline looking like for the next couple of months?
So if you see, currently the pipeline is lower than what we have seen in the last fiscal. Now, that's obviously because of the volatility in the market. But as the AMCs, various AMCs, they see selective ideas on NFOs. They are launching it, and in the last month, obviously last month, we did see some good momentum. Last month was slightly silent, but it's very product specific, and let's say there's a particular theme where there is an interest from the investors or the distributors. Suddenly, the bump up in the flows is there. So the trend line is slower than last year, I would say. And so yeah, I think it's going to be very product specific, and when these products get launched at various points of time.
Well, in terms of NFOs, I'm just for viewers' context, in the month gone by, we had the Bank of India Mid Cap Fund. Then we had some sectoral and thematic funds. Kotak had come out with an active momentum fund. Motilal itself had a special opportunities fund, and that was it. We didn't have too many pure play equity offerings going forward. Mr. Singh, sir, what about SIPs? I think we'll get the numbers soon enough, but that's been the strongest story for the Indian retail investor. What's your sense? How strong will the number be this time? Mr. Singh, sir, if you could hear me, DP sir. Okay, I think we've just lost that line. We'll try and get him back. Akhil, that question to you. Just tell us what you were expecting on the SIP side.
No, so if I go by the past trends, I think I do expect 1.5% incremental flow. So maybe 1,000 to 1,500 crores of net incremental flows last month as well. See, in mutual funds, I think the most preferred way of entering into equities is SIPs. And with the way we are seeing influx of new investors coming in and retail investors investing through mutual funds, largely in such kind of a market, SIP is the most preferred way. So I would definitely be hoping for at least 1,000 to 1,500 crores net incremental higher numbers compared to previous month. Let's hope so.
Yeah, absolutely. Let's hope so. So that's, the way the picture is shaping up as of now. We've got Mr. Singh back. Sir, we were just discussing SIPs and really what can be expected ahead, because let's face it, that investors have kept the faith. The market has been testing everyone's patience for the last 1 year. Can you also tell us what's happening X of SIPs and X of the NFO, activity? How are redemptions? Are there redemption at all, or is there more lump sum money coming in? What's happening with the rest of the flows, X SIP and X NFOs?
See, what happens, there has to be some natural redemptions. When there's generally a longevity of 3 to 4 years, and people need money, they will get money, new money will keep on coming. It's very, very difficult to point whether the redemptions are more or less. But we see the average redemptions are there's no panic redemptions. That is number one. Because of the volatility, nobody is getting the money out. Whosoever is taking the money out is for the need-based. And we are absolutely seeing then the small investors are keeping full faith in the market, retail investors, so on and so forth. Incremental money other than SIPs and NFOs, yes, it is muted. That is very understandable because of the volatility in the market and whatever is happening in the geopolitical side. But I think the days like today, we see a lot of flows coming in. Whenever there is a positive news, a lot of money which is lying on the sidelines do come in. So we expect the good times to come. We expect some FIA money to come back. So maybe there will be good times in the coming months.
So we don't know about FIIs, but if it wasn't for you, us, the whole retail ecosystem, this market would have been at a different level altogether, right? Quick last point to you, Mr. Singh, since you're saying that, yes, there will be some natural redemption. Again, so we're talking about the expansion of the market and the retail flows largely contingent on, of course, the SIP book, and that's strong. But the rest of it is contingent on product innovation. A lot of thematic funds have been launched. This time the thematic fund number is lower. But how do you see that as a trend? Because if thematic fund and NFOs, if the experience is not good, it could also be detrimental in some ways, right? It can backfire.
Asset allocation will be the key. A lot of asset allocation fund like multi-asset allocation funds, or fund of the your hybrid funds will do a very play a very big role in coming months. And second, we have to understand that these flows which we are looking in the gold ETFs and silver ETFs, so on and so forth, partly because of the money coming in those funds, and partly because the funds are investing in those ETFs. Like my multi-asset allocation fund will be investing in the gold ETF and silver ETF as well. So that's the way we have to see it. There is not only the retail which is coming, but retail money coming indirectly also is there in the ETFs. And I personally feel that the coming 3 to 6 months are there for the asset allocation funds.
Okay, and they have been doing well, absolutely.
Yeah.
Well diversified across asset classes. Those funds have been pulling in more money. Little lesser today on the multi-asset side this month, but generally they've been picking up. Thank you very much, gentlemen, for joining in and giving us perspective on the monthly mutual fund data. So the headline is the flows have fallen a little bit compared to July, but then July was a bumper month. This by itself, 33,400 odd crores, is not a bad number, guys. Okay.
All right. And that's courtesy lower NFOs this time.
Lower NFOs this side, lower money in arbitrage funds. But yeah, I mean, difficult to have huge NFOs month after month. It's a product launch activity. It can be slightly cyclical in nature.
All right. We'll slip into a break with the news that it's 24,970 on the Nifty. So still hovering between 24,950 to 25,000. Get into a break on the other side. As always, we'll get you a check on what dealing rooms are saying in D Street Chatter and a few BTST calls. Welcome back. Good day so far. Let's find out what the chatter is in dealing rooms. Nimesh is now joining in as always. Nimesh, it's good to see the tech index still flying high. In 2 days, it's up nearly 5%.
Absolutely. For second day running, it's the IT which is helping the Nifty to be up almost 100 odd points. And as you rightly pointed out, it's a good day. And now we are seeing a bit of short covering rally beyond IT stocks as well. What we saw in the last couple of days was covering in IT. Now, some of these auto sector, export-facing auto sectors, defense names, they all are seeing a bit of short covering rally as well in today's market. From a flow perspective, again, a mixed day, but like what I mentioned yesterday as well, I understand even in today's market, there is a small MSE buy basket at a leading FID. So maybe some individual names will get reacted in the last 30 minutes of trade. But one sector which is seeing a bit of buying interest back is the PSU bank names. The index is up 2%. A lot of individual PSU banks are seeing a bit of bidding interest as well, is what I understand. So that's one space which is not seeing short covering, but a bit of buying as well from large institutions. Technically, we are very close to that very important resistance of 24,950. But again, from a powerful short covering rally point of view, the feedback is that Nifty has to cross 25,200. If that gets taken out, you will see further short covering rally in the overall market. So that's the technical feedback. But broadly, from a flow perspective, a small MOC is again what I understand. But if it's for the second day running, it's IT on the back of short covering, which is helping the markets to sustain the morning gap up.
Lots of mid-caps flying in IT. Zensar, Persistent Technology, Atara LXC, Mastech, Coforge. These are all mid-cap IT stocks, 4 to 6%. But Nimesh, what do you have in terms of stock-specific action in your chatter?
Okay, so the first stock on my list is PNB Housing. That's been consolidating with a bit of a positive bias in the last couple of days. A couple of things. One, I understand the selling pressure from a leading sovereign fund is largely over. So that selling is done with, is my sense is. And also for PNB Housing, the next big takeout will be the appointment of the new CEO. For that, I understand today is the last day for applications of the for the CEO's position. So that's something to track going forward in PNB Housing. So that's the first name. The second stock is Time Techno. Again, the stock has been consolidating of late, but even in Time Techno, I understand a leading domestic mutual fund has been an active buyer of late. So that's the buzz there. The third name is JSW Energy. The stock is up 3% in today's market. It's recovered from the recent lows, but even for JSW Energy, my sense is that there could be a QIP very soon. I understand the roadshows have started as far as the fundraising is concerned. So that's the third name. And the last one is Healthcare Global. The stock has recovered very sharply from the intraday lows on the back of that large block. In the afternoon block window, 5% equity got changed hands. And I understand the PE investor was a seller in today's block. So it's technically a clean-out trade from the PE investor. They've completely sold out in today's block deal. So that's Healthcare Global recovering after a large block today.
Nimesh, Tega Industries, you were recently telling us about Tega. What's happening? I mean, any update?
Rima, I've been tracking that stock very closely. It's been part of my chatter list a couple of times in the last few weeks. But again, for Tega, I've been highlighting that it will be a large corporate development. My sense is there's going to be a large leverage buyout, and for that, maybe some private equity investors are likely to buy stake. Also, there's going to be a preferential issue to raise money in Tega Industries so that that can be funded for that large overseas acquisition. So something is around the corner. Announcement can come very soon, but that's a big development in Tega Industries, which is likely in the very near future.
Got that. Thank you very much for that. The stock is down 1.5% today, but in the last 6 months, it's seen a rally of close to about 55%, 6 months. But let's talk about the futures and options space. Nigel's moved over to tell us about the trends there.
Well, it was a good start to the trading session. I think the end is going to be a little bit disappointing because you would want us to end above the 25,000 mark, which appears unlikely. Now, you've got the direction right today, and that's why the 25,000 call, if you look at that, the premium is still up, but from the highs of the day, it's come back. So that's telling you there's a mix of activity at that particular strike. However, on the 25,000 put itself, there is clear signs of writing. The premium over there has crashed, and just take a look at it. It's down by close to around 45% in today's session. So the broad levels you're looking at in the near term, that 25,050, the bulls are making a bit of a meal of it and the bears are fighting out there. So 25,050 is important on the upside. The first reference point on the downside, going by the options data, going by what, technical levels, 24,750, that's the reference point you're looking at. The Nifty Bank, today as well, it showed signs that it wants to come back into its form. And remember, bulk of the shots are on the Nifty Bank. So it came closer to around the 20 DMA, but it couldn't conquer that mark. So for the Nifty Bank, that 54,750, 54,800 mark is extremely crucial because that's where the 20 DMA comes in at. The IT index, year to date actually that continues to underperform, but that's now seeing some good bit of buying, from the recent lows. In fact, in the last 1 month, the IT index has gained more than 5.5%, outperforming the Nifty as well. So that actually has found its way back. Let's see whether or not it's got enough in it to maybe take us to around the 39,000 mark. Moving to stocks in focus today, tech. Some of those tech stocks are coming for short covering. Oracle, remember that one is seeing fresh buying. But if you look at Tata Elxsi, the stock is up, open interest is down. If you look at the other one, which is KPIT Technologies as well, remember these stocks have seen a sharp correction from the top. But both of them have come in for a bit of a short covering bounce. On BSE, the street is sensing that there is some negative news in the offing. That's why the stock is down and the open interest build-up is massive. Keep in mind the shorts are heavily loaded in the system. If the worst case outcome doesn't play out, I'll keep an eye out on BSE actually, because at around that 2,000, 2,100 levels, we did see some buying interests out there. So we'll keep an eye out on that. And finally, RBL Bank. There is some unwinding of long positions is what we've seen. Some shedding even in the options data. But at the last time I checked, it's not done enough to come out of the F&O band. So this will, in all probability, continue to remain in the F&O band, though in fact we've seen that in today's trading session, there is some shedding. So cut to cut, but I think it still continues to remain in the F&O band. Back to you.
Thank you very much for that. Mitesh is now back with us. Mitesh, 15 minutes to go. Any more trades?
I think a lot of defense names have started turning up. So BDL is something which has come on the radar. BTST here with the stock at about 1487 and a target of 1520 can be possibly looked at on the upside. BEL similarly, I think also is interesting. BTST here with the stop at 386 for targets of 391.5.
Got that. Thank you very much for that. Amrish Baliga is now joining in. Amrish, Oracle Financial Services now 10% higher on the stock. There is the rub-off positive impact from the parent company, Oracle Corp, reporting good numbers, cloud surge, very strong guidance. And plus, Oracle has underperformed. Its all-time high levels was more than 13,000. And now the stock today is closer to 9,200. So there is that gap compared to the levels that it was perhaps about a year back. Explain to us, is there a direct connection? Should the street be this excited about OFSS?
See, it is sentimentally positive, the performance which has come of the parent. So I think it can bounce back, but don't really expect it to go back to those levels of 13,000. Possibly it can go back to levels of about 10,000, 10,500. But beyond that, I think it'll be a bit difficult unless we see a major uptick in the performance here.
Okay, all right. But Amrish, you normally join in and you give us that one stock that's on your radar. Which one is that today?
Nigel, the stock is Sheela Foam. It's more than a 50-year-old company, a leading manufacturer of mattresses, well-known flagship brand, which is Sleepwell. PU Foam, which is a key raw material for them, is manufactured in Australia through their wholly owned subsidiary. And even in Australia, they have a very decent market share of about 40%. Kurlon was acquired about 2 years back, and the integration is more or less done. But then because of this takeover, the margins had suffered to a certain extent. But then now, the margins have seen a decent uptick in Q1. And the India market share is about 30% for the company. And the products are sold through about 6,000 exclusive brand outlets, 16,000 multi-brand outlets. They have in fact added 400 outlets in the last quarter. In fact, the management is now quite confident of a 15% CAGR as far as the top line is concerned over the next 3 years. And premiumization surely will ensure better margins even going ahead. Railways is another big opportunity for them. And they're in fact supplying mattresses for Vande Bharat sleeper. So expected EPS for FY27 is about 18. And my target price here would be 920.
Okay, that's Sheela Foams for you. Any amongst these shrimp exporters, like an Avanti Foods, Apex, Have you analyzed the fundamentals?
See, I mean, the fundamentals don't make much of a sense now because in case, this tariff continues, then I think all of them would be affected, to a decent extent. But now the expectation is that there could be a U-turn looking at the latest comments from President Trump. So based on that, we have seen this bounce back. So unless, of course, there is a clear U-turn, you don't expect a long-term sort of a move on this. But from a short-term perspective, yes, I think sentiment-wise, it can bounce a bit more. Maybe, something like a Avanti feed, maybe to levels of about 825, 850. But for it to have a sustained up move, I think clearly there has to be a U-turn on the tariffs.
Okay, all right. Stay on, Amrish. We'll have more questions for you in just a bit. PSU bank stocks have been buzzing around in trade, and Gaurav has been looking at a couple of potential reasons why. Gaurav, what comes to mind?
Well, as PSU bank stocks are in focus, in fact, if you look at the PSU index itself, the PSU banks index is up more than 1.5% and all the constituents are in green. And the reason being that PSB Manthan, which is going to happen on 12th of September, this will be a two-day event where Finance Minister is likely to meet the top management of most of the public sector banks. And with this, the optimism is rising across two segments. First is privatization and second is divestment. In fact, in an exclusive interview with CNBC-TV18, Finance Minister also said that you will see action in privatization and divestments. And when we look at the divestment angle, we already have a couple of banks who are likely to raise around 45,000 crores via QIP. We already have a few banks who already have the approval from the board in the likes of SBI, Union Bank, Bank of Maharashtra, so Indian Bank. So this possibility is already there. Second is that as per our exclusive sources, it is also said that the government is likely to consider increasing the foreign direct investment limit for public sector banks. Remember, currently it is at 20%. So there is some speculation that this can also get increased because participants say that Indian banks need more capital, and at the same time, consolidation of PSU banks cannot be ruled out. So when we look at consolidation, this is not something new. In April 2020, we already saw this kind of exercise happening where 10 private sector banks consolidated into 4. And we got the major banks like Punjab National Bank, Canara Bank, Union Bank and Indian Bank actually increasing their book because of this consolidation. In fact, when we look at the entire PSU story, we are already seeing some kind of uptick in the fundamentals as well. If you look at the credit growth, in first quarter of FY26, we saw most of the PSU banks reporting double-digit credit growth. If you look at ROAs, now PSUs were known for not having ROAs more than 1%, but in first quarter, we saw the bank like Bank of Maharashtra reporting 1.8% ROA, which is even higher than most of the private sector banks. And again, we saw banks like Indian Bank, SBI, actually reporting ROAs of more than 1%. So definitely, there is fundamental shift for PSU banks where we are seeing strong loan growth, better asset quality and better returns. And at the same time, with this PSB Manthan, now there is speculation and optimism rising around. And as a result, we are seeing the same optimism in stock price as well.
Okay, all right. Got that, Gaurav. Thank you very much for the analysis there. We do have to take a very quick break on that note. Come back on the other side with more market talk. Welcome back. 4 minutes to go. Just some important geopolitical, developments that we must keep in mind. Remember, the US president had tweeted saying that it was really up to EU. If the EU was willing to put secondary sanctions on Russia and its trading partners, then US would do the same. And now there is a statement that has come in from the EU leadership. In fact, the president of the European Commission, Ursula von der Leyen, has spoken on the ongoing Ukraine war. And she said that Europe will continue to support all efforts to bring peace in Ukraine. And there seems to be some reference on the potential sanctions as well. Take a look.
Because Ukraine's freedom is Europe's freedom. The images in Alaska were not easy to digest. But just a few days later, European leaders came to Washington to support President Zelensky and secure commitments. Real progress has been made since then. Just last week, 26 countries in the coalition of the willing said they were ready to be part of a reassurance force in Ukraine or participate financially in the context of a ceasefire. We will continue to support all diplomatic efforts to end this war. But we have all seen what Russia means by diplomacy.
Okay, that's the latest on the geopolitical front. By the way, Ola Electric, I think, is seeing a bit of an intraday spike. Just pull up that intraday chart of Ola Electric. The stock has been very, very volatile. It had a big up move about 45 days back. Since the last 1 month or so, over the last couple of days, it's been correcting. And now the stock, once again, is seeing some buying. It's crossed the 200-day moving average with the up move, and I think there is a block deal which is taking place in that. Other than that, in the last few minutes, you are seeing some spikes in EIL, Apollo Microsystems, which has seen a 145% jump this year. That's been higher. BSE is trying to recover some lost ground, but still likely to end with a cut of about 3.5%. Amrish, Urban Company, this consumer tech company, we've all used their services. That's opened up. Have you analyzed it?
Yeah, in fact, we are finding the valuations quite decent at which is being offered, and we are quite sure that it should get really oversubscribed quite heavily. So we've been advising our investors to subscribe to the issue.
I think it got subscribed completely in the first couple of hours of opening. And it's about 15,000 crore in terms of evaluation. So if you have to compare it with, say, another consumer tech company like a Zomato, Swiggy, of course, completely different ball game.
Yeah. But it's similar class of companies, platform companies or consumer tech companies broadly. But the difference is an urban company, you would call them when you need a salon service once a month, deep cleaning during Diwali once a year, right? Zomato can be ordered every month. 5 times a day.
Or, on the grocery front, every single day. If you want to order in, it could be once a week, once a month. So there's a big difference in the frequency, right, between the two. So there are different, not exactly comparable, but you could say it falls in the same
structure, but different models.
Also, the other difference between the two is Zomato, Swiggy are asset light, right? All they have are delivery partners. But Urban Company invests in training their service professionals. So in that sense, it's asset heavy. So these are the two big differences that I see.
And they also have that brand native, right? Where they just started, with water purifiers and a couple of hard assets that they're...
Two products. Water purifiers and smart locks.
And locks, locks, so let's see what they plan to do on that side. Fair enough. It's an IPO definitely that, that has the market's attention, and we'll see how it fares. Amrish, thanks very much. We're down to the last minute, so we'll quickly recap today's trading action. So it's been a day where the bulls have managed to retain a bulk of their charge, their gain, and that's good. 100 points on the Nifty, up and away. And both banks and IT to a large extent have helped. Look at Wipro, HCL Tech. Look at TCS, gains between 2 to 3% on these stocks. Even Infosys continuing its good form from yesterday, 2% higher. And then you have the financials that have contributed. So the twin engines for the market have fired, IT and financials. SBI, IndusInd Bank, look at SBI Life, Bajaj Finance, Axis Bank. So all kinds of lending and non-lending financials have done pretty well. Beyond this, some other key trends, gains for an NTPC, for an ONGC, for Tata Steel. But the flip side has been autos, actually. The profit taking was largely on autos today. Bajaj Auto, M&M, Maruti, Hero Moto. Some of these names have lost between 1 to about 2.5% after the big run-up that they've seen.
The bulls were in control and markets have ended higher now for the 6th trading session We crossed 25,000 on the Nifty on an intraday basis. We're closing shy of that with a gain of 110 on the Nifty. Sensex up 330. And good to see the mid and small caps outperform with a gain of 1%. Good advanced decline ratio, 3 stocks up, 2 stocks declining. All this came on the hope and optimism of a trade thaw between US and India. That was the big driving force behind today's up move. We'll take your leave and closing bell. Thank you very much. Don't go anywhere. On the other side is Markets Forward.